Hello, everyone, and welcome back to the XRP Ripple Insights channel. Imagine waking up one morning to find your portfolio has surged, overnight unexpectedly, dramatically, not because of hype or rumor, but due to a sudden, unrelenting shortage in XRP's available supply. That scenario is not a fantasy. It is rapidly becoming a very real possibility in global financial circles. This isn't just a market rumor or another round of crypto speculation. What we're looking at is a fundamental shift in digital asset economics, an XRP supply shock that could trigger monumental wealth transfer and potentially turn early positioned holders into overnight millionaires. Why should this matter to investors focused on the Iraqi dinar, Vietnamese dong, or even the Zimbabwean dollar? Because the very mechanisms causing this shift, central bank liquidity crunches, global de-dollarization, and institutional realignments, are the same ones that could elevate XRP as the global bridge asset. With traditional currencies in transition, XRP stands at the intersection of currency revaluation and blockchain adoption. This article breaks down the full scope of what's coming: expert insights, market analyses, and detailed projections on how XRP's shrinking supply could alter investment strategies across fiat and crypto alike. To understand the gravity of the XRP supply shock, one must first comprehend the fixed and diminishing nature of its supply model. Unlike Bitcoin, XRP was pre-mined, 100 billion tokens created at inception, with Ripple Labs controlling a large portion via escrow. Each month, Ripple releases a limited quantity of XRP from escrow, typically a billion tokens, but returns the unused amount, preserving scarcity. While critics once questioned this system's transparency, today it is widely seen as a mechanism that introduces predictable scarcity, especially as Ripple increases utility partnerships and institutional integrations. But here's where things become critical. Massive amounts of XRP are being locked up permanently in global financial systems. Banks, fintech companies, and central banks using RippleNet and on-demand liquidity, ODL, are not trading XRP like speculators. They are holding it as a strategic bridge asset. Ripple has inked deals across the Middle East, Asia-Pacific, and Africa, regions also experiencing a surge in interest in asset-backed currencies like the dinar, dong, and Zimbabwean dollar. As XRP becomes embedded in these systems, fewer tokens remain in circulation. This isn't mere speculation, it's mathematics. With increasing utility, reduced trading float, and institutional hoarding, XRP's available supply is collapsing. When demand meets hard scarcity, the result isn't just price movement, it's explosive valuation spikes. That's the core of the looming supply shock. XRP's role in the evolving conversation about a global currency reset cannot be overstated. As faith in the US dollar erodes and BRICS nations continue their move toward a multipolar reserve currency system, there is growing recognition that legacy fiat systems need a neutral, borderless medium to connect old and new frameworks. XRP's design, speed, scalability, and near-zero transaction cost positions it as a prime candidate for this transition. Investors in the Iraqi dinar, Vietnamese dong, and Zimbabwean dollar have long anticipated a revaluation event that would propel these currencies to fair market value. However, what has often been overlooked is the mechanism by which such revaluations could be facilitated. Enter RippleNet and the XRP ledger. Countries with underutilized or undervalued currencies could integrate with Ripple's system to access global liquidity without going through Western intermediaries. This makes XRP not just relevant, but essential in a reset scenario. For dinar, dong, and Zim investors, the possibility of XRP acting as a conversion layer for revalued currency is more than intriguing. It is game-changing. Holding XRP in parallel with these fiat positions could become the safest hedge, allowing investors to navigate both worlds: traditional currency appreciation and digital asset multiplication. Top analysts across the crypto and financial worlds are beginning to sound alarms about the XRP supply situation. CryptoQuant's liquidity indicators show a steady decline in XRP available on exchanges, dropping over 30% in the last 12 months. CoinShares institutional reports highlight growing XRP inflows from hedge funds and sovereign investment entities, suggesting long-term positioning, not short-term speculation. Veteran market analyst Linda P. Jones recently noted, "We are not seeing XRP flow back into exchanges after OTC, over-the-counter purchases. That tells us institutions are vaulting XRP, likely in cold storage, preparing for future utility. Similarly, crypto economist Raoul Pal has argued that XRP is now being viewed not as a commodity or security, but as a sovereign bridge asset, a fundamentally new category in financial frameworks. These insights paint a clear picture. Supply is falling fast while adoption metrics are skyrocketing. Ripple's ongoing legal victories, including the July 2023 ruling that XRP is not a security when sold on public markets, have only accelerated this institutional push. When laws clarify and uncertainty vanishes, money flows in. For XRP, the timing couldn't be more potent. The price is low, supply is drying up, and utility is peaking. For strategic investors, that spells one thing: accumulation before detonation. One of the most compelling implications of the XRP supply shock is its ripple effect, pun intended, on fiat currencies poised for revaluation. The dinar, dong, and Zimbabwean dollar have long been undervalued due to geopolitical instability, historical sanctions, and economic restructuring. But a global liquidity shortage and the need for frictionless currency conversion could turn these currencies into digital economy contenders. As Ripple partners with governments and central banks to explore CBDCs, central bank digital currencies, it's not far-fetched to expect integrations with nations holding large quantities of dormant or restricted currency like the Iraqi dinar. In this scenario, XRP becomes the pipe through which these currencies flow into global markets. That demand doesn't just spike XRP prices, it elevates the relevance and value of the dinar, dong, and zim, giving them a second life in the blockchain age. More importantly, this is no longer hypothetical. Ripple already has ongoing CBDC pilot projects in over 20 countries, including those in Africa, Southeast Asia, and the Middle East, regions where Zim, Dong, and Dinar investments are concentrated. These developments point to a coordinated shift: traditional currency wealth merging with digital rails, and XRP sitting at the core of it. While much of the attention around XRP centers on its role in emerging markets, U.S. investors have a unique and urgent angle to consider. With Ripple's legal battles against the SEC tilting in Ripple's favor, institutional money within the United States is poised to enter XRP en masse. Until now, regulatory uncertainty kept US-based funds cautious. But with clarity gaining momentum and the possibility of an XRP ETF on the horizon, the next wave of capital could dwarf everything seen thus far. Moreover, XRP's relative affordability compared to Bitcoin and Ethereum presents a low barrier entry for American investors looking for asymmetric returns. Think of it this way: Bitcoin at $60,000 might double or triple in an extreme bull run, but XRP trading below $1 has a much broader multiplier potential if it begins to serve as a global liquidity layer. Even a rise to $10 or $20 could represent life-changing returns for those with significant holdings, especially those who invested during legal uncertainty. U.S. investors who have already positioned themselves in physical dinar, dong, or zim note stand at a unique crossroads. By strategically allocating some capital into XRP, they could bridge their speculative fiat positions with a digital asset uniquely built to interconnect these currencies globally. It's not just diversification, it's future-proofing a portfolio against both fiat devaluation and technological disruption. When discussions arise about XRP hitting $10, $50, or even $100, critics are quick to shout, "unrealistic." But under a supply shock scenario, those projections become grounded not in hype, but in hard economics. Let's do the math. XRP has a total supply of 100 billion, but less than 50 billion are actually in circulation, and that number is rapidly decreasing due to long-term institutional locking. If Ripple achieves just 10% penetration of the $155 trillion global cross-border payments market, the necessary XRP liquidity would be staggering. Let's say XRP becomes the bridge for $15 trillion in annual settlement flow. Even assuming a conservative velocity model where each XRP token is used multiple times per day, the minimum price needed to support such throughput could well exceed $10. And that's before factoring in speculative demand, ETF inflows, or utility in central bank platforms. Analysts from institutions like Fidelity and Standard Chartered have already modeled XRP price floors of $20, $50 in full utility scenarios. For Dinar, Dong, and Zim investors, such valuations are not just exciting, they are essential. If fiat revaluations take place in parallel with a rising XRP, the synergy could amplify gains dramatically. Imagine exchanging revalued currency into XRP just as it enters a parabolic rise. That's the moment where overnight Millionaire shifts from meme to reality. Iraqi dinar and Vietnamese dong investors have always operated in a space of high risk, high reward. These currencies are tightly managed, politically influenced, and historically illiquid on global markets. But as global financial infrastructure evolves, especially with blockchain at its center, the path toward revaluation is no longer dependent solely on political reform. It's increasingly tied to technological rails. Ripple's technology provides that rail. For Iraq, Vietnam, and Zimbabwe, countries with promising growth potential but strained by outdated financial frameworks, joining the XRP ledger or RippleNet could offer unprecedented access to global liquidity. Already, Ripple has made significant inroads in the Middle East and Southeast Asia, regions intimately connected to the dinar and dong investment communities. This sets up a scenario where dinar and dong revaluations are not only possible but catalyzed by Ripple's infrastructure. By incorporating XRP into their strategy, dinar and dong investors aren't abandoning fiat. They're complementing it with the very asset that could make their fiat relevant in global markets again. A revaluation is powerful. A revaluation paired with XRP-based liquidity is transformational. For serious investors, that distinction is worth more than gold. Zimbabwe presents a unique, volatile, but potentially explosive situation. For years, investors have speculated that a return to a gold-backed or asset-supported Zimbabwean dollar could bring massive wealth to holders of historical ZIM notes. However, such a transition has remained elusive due to inflation, policy instability, and lack of financial infrastructure. This is where XRP enters the narrative. Ripple's commitment to financial inclusion and partnerships with African central banks are well documented. Ripple has worked with regulators in Ghana, Nigeria, and Kenya to explore CBDCs and stablecoins on the XRP ledger. Zimbabwe, seeking monetary reform and international credibility, could leverage XRP not just as a conversion bridge, but as a core component of digital currency issuance. That would lend transparency, interoperability, and global access to a currency once deemed unusable. For ZIM investors, the opportunity lies in alignment. Align with XRP, and you align with the infrastructure most likely to support and amplify any eventual revaluation event. Whether through conversion mechanisms, CBDC integration, or ODL corridors, XRP could be the key that unlocks ZIM's redemption story. When paired with strategic timing, this alignment could result in exponential ROI, one only possible through convergence of digital liquidity and fiat redemption. The XRP supply shock is no longer a theoretical event. It is a process underway. Each partnership Ripple signs, each XRP token locked in cold storage, and each corridor established for global liquidity tightens the noose on supply. For investors in undervalued currencies like the dinar, dong, and Zimbabwean dollar, XRP is not just a digital asset. It is the lifeline that could bridge yesterday's fiat to tomorrow's global financial ecosystem. Whether you're an American investor looking to hedge against inflation, a currency holder awaiting revaluation, or a crypto enthusiast seeking the next exponential growth opportunity, the signal is clear. XRP's moment is arriving. And with it, the chance for early movers to not just survive the transition, but to thrive beyond measure.